Hello, everyone, and welcome to another week, another episode of this podcast. We're going to be talking about Toronto's real estate. We have been interested, as everyone in Toronto, in the real estate market. Mahmood here, of course, has over 12, 13 years real estate experience, pardon me. In this market, he's seen the ups, the downs, the sideways, the diagonals. He's seen everything. This week we have a bunch of interesting stories. We have a house that had over 85 offers and sold over 250k again. Is the market back to being hot again? We have industry analysis, insight into the latest numbers, what's happening in the real estate market. Is it a good time to sell, a good time to buy? Should you hold? All right, we have some mixed news when it comes to interest rates. Right, some incredible job numbers out of Canada and the US, which has made everyone be like, oh yeah, you know what, that's people have money, therefore there's going to be inflation, therefore we have to keep, like, wait, hold on, let people have money, right? If I'm a political party, that'll be my slogan. And we have news that rents in the USA has actually decreased, for the steepest decrease in rent for a long while in the USA. Could that happen in Canada? Welcome, Mahmoud. How are you doing? How was your week?
Thanks, Ahmed. I'm doing well. Very excited to be here and quite a lot to talk about.
Right? I haven't found it harder to get hold of you than this week. You know, I call you, you reject my phone calls, you don't pick up.
Thank you for sharing.
What's going on?
Thank you for sharing your grievances, but it's nothing personal. Business is business.
All right.
Yeah, it's been quite busy.
Don't use Mahmoud as a realtor. He doesn't pick up.
It certainly has been quite busy. I actually, the reason why I don't pick up your phone call is because I'm serving my clients. So
You have been.
Yeah.
You've been doing so many showings this week.
Yeah, it was. It certainly has picked up. Quite hectic. We did. I think there was one client. We did in 1 hour like 8 showings. Though, mind you, it was condos and within the same area. So we were just jumping from one unit to the other, top floor, bottom floor, go to the next building, and go. You know, we had to fit quite a lot of showings in a short amount of time with different clients.
Nice. A few industrial showings.
That's
too.
correct. Yeah, working in industrial's picking up.
Right. And you launched a project. You're working on a project launch.
Yeah, we actually launched a project, Allure Condos in downtown Toronto. This is at King and Sherbourne by Emblem. Very good project, very good pricing, very good builders, very good incentives. So we thought that would be a good project to be part of.
Yeah, so what's special about Allure? Why are you taking time from viewings with all your clients and 8 viewings an hour to you went to the sales site for Allure, correct?
Yeah, that's right. We had a sort of a project launch for the top realtors within the GTA, and quite surprisingly, sort of majority of them, if not all of them, we had about maybe 200 realtors there at the launch of this project. That usually rarely happens because everyone is so busy and working on so many different projects, but that's usually an indication that it's a good project and everyone wants to be part of it. So just that alone sort of gives an indication as to why we wanted to be part of it as well. So there's usually hundreds of projects that launch or are active at the same time. And we are very picky in terms of which projects that we work with. And one of the first things that we usually are very critical of is the developers. And as you may have heard, quite a few projects in the market recently has canceled or has gone into receivership. We talked about it last time as well. So that's usually one of the first concerns that we have, as well as clients have. And Emblem, who is the builders for this project, have deep pockets. And the way we know this is a couple of things. One of the first things that makes a project great is the developer. So we have to keep an eye out on that. The second thing that we look at is the pricing of the project. How is the project priced relative to other projects?
How much is the price?
It's under $1,500 a square foot, averaging about $1,475 a square feet. A luxury project, by the way, in downtown. And it's competing projects.
What makes it luxury?
In terms of its craftsmanship, in terms of its design, the architecture, the features that it comes with, but more like I'll give you just a
I saw in the marketing they had a Rolls Royce everywhere. What the hell's that Rolls Royce?
Yeah.
Like, everyone gets a Rolls Royce, or
Actually, it's pretty intriguing because originally, by the way, they were trying to sell this project for $1,700 a square foot. So they have now
wow.
introduced this at 1,500 or under $1,500 a square foot. There's a lot of units that are 1,400, or even less than $1,400 a square foot as well. But they originally designed this for $1,700 a square foot. So they made it really luxury with high quality. Now the Rolls Royce that you're talking about, actually, it's pretty neat. So first of all, that's the image that they want to share with you. That people that want to live here, you want to be associated with people that can afford a Rolls Royce. Okay, or
Everyone wants to be associated. You know what makes it special? Like, I don't get it.
well.
Tell
So
me.
one of those things is that they're actually having a Rolls Royce with this particular building. It's included for you. So you basically book out a Rolls Royce, and a chauffeur drives you to various different locations that you need to go to, albeit within a certain radius of downtown, for free.
Like, it's an amenity of the
It's
building.
amenity of the building. So
How do you book it? That's going to be booked out. No, is it just one?
there one or two, depending on how sort of utilized it is going to be. They have an app, so it's smart. You have an app.
That's
You
dope.
book it through your appointment and say, through calendar, I want to go to this particular location in downtown at a restaurant on a Friday night, and then you pick up your date in a Rolls Royce. Imagine that.
Cool. But on the way back home, you have to walk her home.
You can just walk her home. No, it's a round trip. So once you book it, it's a round trip. They'll come pick you back
But
up.
the drive, but it's going to be not available. Like, if the driver comes and drops you off, it's going to wait for you. It's going to go back and drop somebody else off.
Sure. I mean,
How's that?
yeah. So I mean, how long are you going to be in the restaurant for? You're going to be there for at least an hour, if not two, right?
Okay, but how many units are in the building?
There's about just over 400.
Right? So everyone wants to book that Rolls Royce chauffeur, no?
Yeah, but yeah, I mean, you do have to. There's a booking system. By the way, there's also a token system within it as well. So you get a certain amount of you get a certain amount of bookings that you can do in a month's time. So beyond that,
So, like, guest parking.
exactly, yeah. So you have a certain amount of bookings. They're gonna definitely moderate it in a certain way, but there's a couple of Rolls Royces there. But I mean the point is not actually of.
Great selling point.
Yeah, I mean, first of all, you do get the Rolls Royce, but I don't think that's the focus to have on it. What I am going to extrapolate from that is they want their building to be the Rolls Royce of buildings. And I think that's what's important to get from this.
So, are their floor plans good? Are they well designed floor plans? Like, this is the studio. There's a lot of wastage of space over here, that they're making you pay for. Have you come across any good floor plans?
Yeah, I to be honest with you, I like the studio one, even though there is that a little bit of wastage of space. As you put it, there's the hallway. However, if you notice, sort of, you have a separate area for your bed. You have a separate area for your, living room. It's, for lack of better word, almost a one-bedroom unit style. And this is, by the way, relatively quite big, which is about 460 something square feet, if I'm not mistaken.
This one's 434.
434. And usually other sort of buildings, their studios is like 300 square feet. I know that 100 square feet is not, it doesn't seem like a lot, but that makes a big difference at the end of the day.
This one is a one bed, one bath, 500 square foot.
Mm-hmm.
What's that? An optional island over here.
That's correct, yeah.
It's well designed, if you ask me. What do you think?
Majority of their units are very functional and very well designed, and I like that.
Honestly, like, if you have a small condo, I like them without a balcony. It's like a balcony is functional for like such a little time. It's give me the space inside the actual condo, Like here, this is 554 of actual space, and there's no balcony required.
Mm-hmm.
You can use it the whole year. I like how they did that. Again, this one has no balcony. A lot of them don't actually have a balcony. Interesting. I wonder if that's because it's downtown.
So tell me which model, and I'll tell you what the pricing of it is going to be.
Kolkata.
Calcutta. So this is a studio. Remember, the average pricing is $1,475 a square foot. This is the smallest unit. What do you think the price of this unit is going to be per square feet?
Can I cheat? I know the answer. I've seen the.
Oh, really? No, don't say that. Guess.
600K, right?
Guess.
This is 700K.
No, what about per square foot? Well, what does that come out to be? Your estimation, guess.
About 1,600 a square foot.
You would think so. Actually, it's 1449.
1449 for the smallest.
So you're getting the smallest unit cheaper than the average price.
Wow. How much is it? 428 times 1449.
It's
so 620.
exactly. It's starting, although from lower floors. I mean, there is low floor premiums on it, but 620K for a studio, which is 400 square feet, by the way, over 400 square feet, and it's going to be built in let's say 5 years from now, completed. I think it's a very good deal.
Would you invest?
I definitely would, because one of the reasons I'm considering it is the leverage that I can do with my money.
8.5% for 4 years.
8.5% for 4 years. So practically, I mean, even at 10%. So let's say if you're buying the studio model, which is about 620,000, you're basically putting down less than 60,000 to secure a $600,000 property.
They gave Boston a 3-bed. Our 4 cities in the world. How much are the 2 beds? What do you have for 2 beds over there?
Well, 2 beds start at 666 square feet, facing south.
Oh.
Yeah. And that's about just over $1,400 a square foot, starting price.
So what's that? 669 times 1,400. So 940,000.
Yeah.
930,000.
Yeah.
What about a 1 plus 10? What does a 1 plus 10 start at?
1 plus 10 start at 800s.
800K.
800K, which is about, that's the average price, 1475 a square foot.
So yeah, overall, like their market has come down by what? A few $100s per square foot, the pre-construction market downtown Toronto, would you say?
To be honest with you, the builders are being very stringent and they're keeping their prices quite steady. Like right now, the competing projects to this are at $1,700 a square foot. By the way, first of all, there's not a lot of projects in downtown Toronto that are selling at the moment, or especially over the last year, as in they have not been launched. So there's not a lot of competing projects, and the competing projects that have been launched are at $1,700 a square foot.
So this is in essence like the first real test of 2024 of what the market is going to be like.
I think so. So they've launched this at $1,500 a square foot, which I think is a very good price. And I think the pricing, they're going to sort of increase it as the sales move on. But I think the starting price is really good. And I'll tell you why it makes it good though. Right now in the suburbs of GTA, which means, let's say, Mississauga, Brampton, Vaughan, Durham area, you're looking at price per square foot of $1,250 to $1,300 a square foot. So what is better, to buy in, let's say, Mississauga at $1,250, $1,300 a square foot, or to buy in downtown core with limited land and limited availability for $1,475 a square foot?
But it's usually the opposite, because downtown there's so much competition.
No, it's the exact opposite. It's the exact opposite.
There are so many condos and buildings coming downtown.
It's the exact opposite. So let me share something with you. Downtown has no competition. It's a very limited piece of land. There's no competition to it. Suburbs, Mississauga competes with Markham. Markham competes with Richmond Hill. Richmond Hill competes with Brampton, so on and so forth. There's so much suburbs and there's so much land.
Oh, I see what you mean.
So now there's going to be a lot of buildings that's going to be coming in the suburbs. And by the way, the suburbs take maybe 4 years for the for basically 1 year for the process to purchase land. Usually it's one big piece of land. You go, there's one purchaser. For example, this site, they had to buy the site from like six or seven different owners. So imagine how much negotiation one has to do to get that piece of land sufficiently so that they can build this. The approval for this takes 4, 5, 6 years. And then you have construction, and that takes a long time. So percentage-wise, as to how much new buildings that are going to be coming in downtown as opposed to the suburbs, is going to be very, very few and very, very limited. So
what's the early sentiment of this? Like, is there like people rushing to buy it, brokers pushing it? What's the feelers? What's the saying out there?
I think it's a very exciting project, and it is selling. I think they will be very successful in selling this. The mere fact that we had so many brokers already participate in this, there's about 200 brokers. If they just bring in 2 clients each, you're almost done.
Is it going to be as crazy as this story?
Eventually, yes. Eventually, yes.
So this story is a bit bonkers. So a home in Mississauga was sold. This beautiful home right here, stunning, right?
Yeah.
Sold for $250,000 over the asking price, and it had over 85 offers.
Yeah.
85 offers in Mississauga. A modest-looking semi-detached home in Mississauga made headlines this week as it received 85 offers and sold for more than $250K over asking price. The 3-bedroom home at Longleaf Court went on the market for the very low price of $750K. It sold a few days later after 85 offers for $900,999.
Yep.
So $1 million. Right? So, wow, there's a queue of people lining up outside.
that was for an open house, by the way.
That was for an open house. Did you go to this open house?
No, I did not.
Wow. Are people desperate for cheap housing? Is the market picking up? What's going on, Hamid?
Well, first of all, I think this title is completely misnomer. I think it's not doing justice to what is exactly happening. And I think this type of title is part of the problem of what's happening in the market, because it's not truly reflective of what's going on. Yes, they did receive 85 offers. Yes, they did sell it for $250,000 over asking price. But it is not what it's made out to be. And I think that's part of the problem of why crazy the real estate market is in the Greater Toronto area. Let me explain. First of all, listing price means nothing in the market. I can list a property for $1. Now, let's say I sold that property for $1,001. Does that mean I sold it for over $1 million over the asking price? And then in terms of these types of properties in this market, I took a look at it. The market price for this was about like around, give or take, $950,000. That was the market price. So it did sell for over the market price, but maybe about $50,000, so about $1 million. But the true news for me, though, is that it had 85 offers, but it sold about only $50,000 more than what probably it was worth. To me, that speaks more volume. Meaning,
what does that mean?
Meaning, let's say if it was 2 years ago or in the hot real estate market, if you had 85 offers, you would be selling this definitely a few $100,000 over the market price, not over the listing price. What that means is there's 85 offers, but even those particular offers that have come in, the buyers are very cautious to make sure that they're not over spending, because the market is still very tight. With this 85 offers, I would have thought, this would be selling for quite a lot more. But no, relative to the market, it sold for like maybe about $50,000 more than what the current market was worth.
Do you think people are desperate? Because, like any decent realtor will not waste their time bidding, for 85 people knowing they're not going to win it.
Well, that's where I have an issue, to be honest with you. a lot of realtors are wasting their clients' time. There was another news article which was very critical of the listing agents, saying, how come, the listing agents are part of the problem? How come they listed it for, $250,000 less than what it's worth? They're the problem. They're creating all of this. Actually, I disagree. The listing agent is doing exactly what their job is. Their job is to bring in as many offers for their clients, market it as best as possible, and to sell it for the best value. That's their job. The problem that I have is with basically the buying agents, the agents that are bringing in the buyers, and those agents' responsibility is to research the market and inform their clients that the market price for this area is around 950. Are you okay with that? I would probably assume that out of the 85 offers, probably close to about 90% of those offers, meaning about more than 75 offers, were probably close to the asking price of 750. Maybe there was about 10 serious interested buyers, which sort of pushed up the price.
Yeah. I know some of your clients who would be like 750K, yeah, let's bid for it. Let's bid 740, let's bid 730.
Yeah.
And however much you try to explain to them, listen, this is this is it. Mahmoud, put it on offer for 740 right now.
Exactly.
And you can't reason with those
exactly.
people.
And to be honest with you, of course, we get those types of offers, but our job as realtors is to inform and to educate. I don't want to waste my time, and I don't want to certainly waste their time either. And
some clients are special.
For sure. I mean, you have to deal with the clients sensitively. However, you have to sort of educate the clients along. By the way, I took a client and I participated...
To this offer?
No, not to this offer, but to another offer in Brampton, and we were participating with 11 other offers. Unfortunately, we didn't win it, but our offers was about maybe 50,000 to 70,000 away from the top offer, relatively speaking.
Yeah.
So, and we had already educated our client that this is the price that we think that this property is going to sell for, and that's exactly what it sold for. And the reason why we went in with the offer with our clients and we didn't even push further was that sort of that's what the approval that they had for their mortgage, and they wanted to get a little bit more clarity to make sure that they can afford the higher value. So we advised them, don't go above what your limits is. And then we'll deal with other properties within the area. Having said that, part of the responsibility of the realtor is to educate their clients.
So, like this story, this building is actually in Mississauga, and like to see that many desperate people in Mississauga is actually pretty interesting. And I came across a chart. I can't find it, but I found the raw data here. Mm-hmm. That shows that Mississauga is by far and away one of the worst areas in terms of, in 2023, building new homes relative to their target. The target for Mississauga was 8,800 new builds in 2023. Mm-hmm. They only did 2,400, which is 27%.
Yeah.
And if you look, like, it's by far and away one of the worst performing areas across the whole GTA.
Yeah.
Right, like there's a lot that have met 36%. This one's 9%. I don't know where this is, but from the big areas like Kitchener, Kingston exceeded, Innsfield's exceeded, Hamilton's exceeded, met target basically 97%. Guelph met target, right? Where's Toronto? Aurora, like it's still 40%. Is Toronto on here? Toronto's exceeded target, so they built 30,000. Yeah. Even Vaughan is 60% of target, but Vaughan, the target is only 30,000. Like, of all the biggest cities, I think by far and away Mississauga is the worst. It just shows you how it impacts the local market, and people become desperate for housing, and it pushes people away, it pushes economic activity away in the area of Mississauga. And I've been seeing bits of news where Mississauga rejects perfectly good buildings, but for stupid NIMBY reasons, like people don't actually want to build And it's disappointing that the new Ontario Liberal leader is from Mississauga, so she contributed to this like lack of housing in Mississauga, one of the key areas and cities of Toronto.
Even last time when we were having a podcast, I think we discussed this. The main challenge with real estate in Canada, specifically within Toronto and Vancouver, is the lack of supply. That's the main challenge. There's not enough supply coming in. That's a problem across the board. And then inflation and the increase in costs for labor and products over the last few years didn't help. So a lot of builders pushed off their projects, and so that cost of labor becomes cheap, cost of supply and materials becomes cheaper. And that all contributed into low construction for a lot of these particular cities. So all that is part of the problem, definitely, more so than anything else. It's the supply that has been the problem.
You know what really pisses me off about Ontario and how they handled their housing and the supply and stuff like that? It's like, if you look at it here, Ron Butler has a good tweet about it. It says there's a 600% tax increase in the past 10 years for new construction in Toronto. 600%. To build a new condo, a new building, the price, it's like a stealth tax.
Yeah.
We're literally heavily taxing the right policy to create new supply, keep costs down, get people in homes, home people, actually like 600%.
Yeah.
While like the taxes on homes, current homes, and homes that are like fundamentally not worth keeping around are so low. Like Olivia Chow just tried to increase rent by 10%, and everyone's kicking up a fuss. But to build new houses, condos, whatever, they increased it by 600%.
Yeah.
And like it's obviously like politically convenient, because when you tax new homes, no one owns those homes. Or like in the news, we're like, oh, we're taxing developers who are just profit seeking or whatever. But like there's no constituency. But once you tax like an existing home, the people here incredibly selfish. They're like, oh yeah, why are you taxing me? It's like you're living in a valuable piece of property that's increased by $1 million over the past 10 years. You need to be paying your tax, right? We shouldn't be taxing builders building homes. And that's what really, really pisses me off about the Ontario market. And if you look at the story in the US, right, over the past year, rent in the USA, across the USA, has decreased. The biggest decrease in rent over the past 3 years.
Yep.
And what's the reason? Like, it's such a simple reason. It's like, look at this, right? There's been so many new buildings that came on board over the past few years. So much new supply. The vacancy rate in the States has gone up to 6.6%.
Yeah.
Right? And guess what happens when you build?
Exactly.
Prices go down.
Exactly.
Prices are maintained, right? There hasn't been like a crash in rental prices. So if you're a landlord, guess what? You're still having a profitable income. You're still having, if you're a homeowner, your price increased, not drastically, not $1 million over 10 years, but it still maintains its value while like actually sharing the pie with everyone else, right? And if you look at what's happening in Toronto, in the greater Toronto area, look at this chart, right? This is by Wawa. The yellow line here is new residential units constructed. And the red line here is new residents, temporary or permanent residents in Ontario or Canada. Look at that.
Yeah.
We haven't ever built the last time we built more than 200,000 homes, right, was 2008. And ever since then, we just let in millions of new people. And they're all welcome, of course, as a proud Canadian. But we can't go on like this. This can't go on like this. This is just fundamentally pushing people out. It's hampering our economic activity. Like, these house prices are just crazy. Like, it's not, like you go across the border, it's so much cheaper. Like, this is a fundamental problem. And like, it's incredibly frustrating that we're just taxing the hell out of people trying to build new homes. Fine, developers make profit, good for them. But like, if you're going to tax them an extra 100K, 150K per unit, guess who's going to pay for that? It's not the developer. Right?
Yeah, no, I think you hit the nail on the head, as they say, with the supply issue that we have. None of the governmental parties are doing anything, to be honest with you, about the supply issue, and that's the key challenge. As you can see, the how much immigration that we've had over the past few years, and sort of we're not able to keep up with the demand of it. Now, the two things I will add on to this. Number one, you mentioned that they've increased the before even the shovel hits the ground, they're going to be paying development fees. Basically, let's say if it's like a $500,000, the cost of a condo, we were just talking about it, $600,000, more than $200,000 of that goes to the government. So,
Wow.
So now, how much are the developers going to be incentivized to lower their price? They can't. They just cannot do that. So they have.
So they have to spend that 300,000 on actually building the building, buying the land, right? Paying labor, paying for everything.
Exactly. There's only so much
before they can.
There's only so much that they can go down, and which also means that so when you have other projects that are coming at $1,700 a square foot in downtown, they cannot go down any further. So that's the limitation. Now I'll tell you one other thing, and I think this is also very key. Over the past few years, there has been limited construction and limited sales of pre-construction as well. There's an article about it. A record high number of new condos are going unsold in the Greater Toronto area. So over the past couple of years, because pricing has been high and people have been very tight on this, a lot of the new sales have not sold because the prices relatively were high. So now guess what does that mean? You have last couple of years, very limited sales of new construction. Sales of new construction, by the way, means not of properties that exist, that's going to be built into the future. So now 4 years, 5 years, 6 years, 7 years down the line, this last 2 years, nothing's sold, so nothing's going to get built. And look at how much immigration is coming in. What do you think is going to happen to the prices 4 years down the line? It's going to shoot up.
I got nothing to say to that, except for this is bonkers. I genuinely don't know.
But let me add let's sort of test out this particular theory. You showed some stats for the states where they created quite a lot of construction, and that caused the prices to come down, especially also the rent. Why? Because they introduced a lot of supply. Can I show you a stat, by the way, myself? Let me share something with you, Sarmad. Look at these charts. These are the average condo rental rates in Toronto. So you have the 1 bedroom, 2 bedrooms, 3 bedrooms, and the top left, as you can see, is the overall. Look at the trend of what's happening to the rental market since middle of.
So it's decreasing also.
It's decreasing across the board. So what's happening in the States, the same theory is also true here. So the rental markets is going down. And in January, it's also going down. Well, two things. One, the theory that you mentioned, the supply is increasing. So we had 2023 was a record number of closing for condo units. And then 2024 is going to be even more. So again, more supply, prices reduce. It's as simple as that in real estate. Number one. Number two, a lot of the buyers over the past couple of years rented out because of high interest rates and the values of the properties being high. So now in the market, they're gearing towards making a purchasing decision over the next few months. So a lot of them are going to be buying instead of renting, so which is also decreasing the demand on the rental market.
So 2023, 2024 are going to be good years for renters, and then after that?
Yeah, I think over the next year or two, I think it's going to be a very good for the rental market. But then we're going to hit that patch where there's not going to be enough construction and not going to be enough supply. Then it's going to be tough again, both for renters as well as purchasers in the condo market as soon as this inventory gets absorbed. Which will take a year, definitely around 2 years, but thereafterwards it's going to be a little bit of a tough market.
Oh, nice. So what are these charts? Are these your charts that you created? What are the highlights?
So the biggest question that everyone has on their mind is, has the market picked up? Is it like a crazy market or not? And I think that's the biggest answer that we need to give for this. Real estate is either what's happening in the market or the spec market, what people are thinking is happening, and then they're reacting to it. But what's actually happening on the ground could be totally different. And I think I want to showcase a few things for you guys. So first of all, if you take a look, this is the 2023 sort of chart in terms of how many sales has occurred, how many active listings have been on the market at the same time, and what's the average pricing sort of that they have sold for. This number that you see is the months of inventory in the market, and this is a very key indicator of whether the pricing of the market is going to go up or down relatively accordingly. So if you look in the 2023, which was last year, so you had the months of inventory over the first few months decrease, and look, the pricing, average prices increased. And as sort of in the months of May and June, we had the increase in interest rates, guess what? People stopped buying and the number of properties in the market increased, and likewise, the prices decreased accordingly. So now we are at 2024. So this is the numbers in January. Let's look at this for comparisons purposes. So the white line, the graph is the last year's numbers. The orange one is this year's numbers. So this year, we actually started with lower months of inventory than last year. That means the market is hotter. However, let me show you something else now. Look at the average pricing here. Last year when we started, the average pricing was 1,040,000, whereas opposed to this year is 1,030,000. What this is saying though is, you see how we saw the news article with 85 offers? A lot of the activities that's happening in the market right now is for properties below $1 million. That's where we're getting the most activity. Properties that are over $1 million, especially over 1.5 million, sort of nothing is moving at all. It's very little activity that's happening. So what that means is that people right now are interested. They want to get into the market, but they're being overtly cautious to make sure that they're not overspending. And of course, the affordability is still difficult because of the high interest rates. So if there's a deal at undertaking, they want to take it. However, they're being overly cautious. Hence why you had 85 offers, and perhaps maybe that property sold for, you know, maybe 50,000 over what the actual market for it was. So there's a lot of more showings happening. There's a lot more activity. There's a lot more offers, but people are not going ridiculous on their offers. They're being overly cautious. And I think that's the learning that we can take from this.
Okay, so what's interesting is there's less months of inventory on the market now than compared to last year, but there's
the average
price is lower. So overall, the market is adjusted. The market is adjusted overall, correct?
Yeah. So what this also means is, look here. What this also means, because this, even though we had a lower months of inventory, but sort of the average prices decreased from December till January. That's expected, by the way. However, what this also means is that a lot more lower priced properties are selling. So it's bringing the average price down and not the higher priced properties.
So there are, almost 30% more activity this year than last year, January this year than last year.
That's correct.
1,100.
Exactly.
And 40 more transactions. So the market is picking up. I think the market is adjusted and stabilized.
Yes.
It's kind of what I'm reading from these charts.
Yeah.
There's stabilization in the market.
Yeah. So if you look at this, so last year we had 3,000 sales in January. This year we have 4,000. That means there's a lot more interest and activity of people purchasing. Now, is it going to follow the same trend or even, rise exponentially as the months go on, and as probably by sort of May time or summertime, the interest rate starts coming down? What's going to happen? So that's what everyone's waiting for.
Wow. January 2022, there were 5,600 sales.
January of 2022?
So an extra
yeah.
Yeah, so an extra 1,400 more sales than this.
Yeah, look at what happened in 2022. So you jumped so high, and then that's when the war and the interest rate hikes started. And look, everything just pummel.
I had a conversation with my mortgage broker this week, and I was actually really pissed off at him because I had a variable
Yeah.
rate, and not once did he call me and be like, you know what, Samra, now is a good time to lock in. You know, when the interest rates were going up, give me a call, lock your mortgage in, right? I had my interest rate was like 1.45, 1.35%,
Yeah.
right? It's like, oh, the interest rates are rising. Samra, lock in at 2%. You'll be safe, right? You're a mortgage broker. You need to have this understanding and this expertise and this authority over me to tell me to lock in. Right now, I'm paying 6%. 6%.
It's
I'm laughing, but honestly, like these guys need to do their jobs properly because he would have got another commission. He would have got me a new mortgage,
Yeah.
more commission for himself, right?
it's difficult because I mean, in 2021, they could have said lock in at that time, lock in at 2%, and they didn't because
They should have lock in. The interest rates are 0%.
yeah.
What's your downside?
Yeah, but sort of the Bank of Canada at that time saying, "Don't worry about it. We're going to keep the interest rate lower. It's only going to get lower." So, and then the next thing you know, whoops, interest rates are going high. Like everyone got variable at that time.
Everyone got variable. Fine. Interest rates go high. Shock to the system.
Yeah.
Sit down. Analysis. Lock in. This is going to be bad. You know. Lock in. You have experience. I expect you as a mortgage broker to have studied the market.
So look at it this way. Imagine him comes in and says, "Hey, the interest rate, I can get you a 5% interest rate. Let's lock it in. You're paying over 6% right now."
No, 5%. 5% is an issue. Fine, but back then they were offering 2.1, 2.2%. What's the worst case scenario that I'm paying an extra 80 base points?
Were you asking for him to have called you at that time or now to say I have a good
No.
Okay.
Now is fine.
Exactly.
That time when it goes
Okay.
up, your job as a mortgage broker is to tell me to lock in or give me good advice. That's your job, right?
You know who I'm really mad at is the banks and the mortgage brokers that work for them. They give very bad advice. I was just recently renewing my mortgage and I've been with them for over 5 years now, and they gave me a ridiculous rate and gave me such bad advice. They know that I'm in real estate as well. So I got a rate of like 6.9% variable, 6.8% fixed. And they're trying to convince me to take a 6.8% fixed. And I'm like, isn't the rates reducing next year? They're like, yeah, but it's not gonna, maybe at most it's going to reduce by, a 0.25% next year. So I'm like, first of all, that's ridiculous. But let's assume that what you're saying is correct. That's still better than me paying 6.9%. 6.8%, because if it reduces just even once by a quarter, I'm paying what, 6.65? So for the rest of the few years, I'll be at a better rate. So you trying to pressure me to get it at that, they know at this particular moment, the banks themselves, that a lot of people are very tight. They're with their job, with their economy, with their credits, and just qualifying at another bank. So they're just giving you the high rates to lock you in and sort of take advantage of the situation. It's unfortunate, I know business is business, but they're very quick to increase the interest rates before even there's news, interest rates haven't even increased, but sort of the bond yields reduced. The fixed rates are nowhere reflecting that.
They gave you 6.9%. Right now, like I think a month ago, I spoke to my bank and they offered 5.9 to 6%.
Yeah, yeah.
And
I would
and then recently I spoke to my bank again. And they were offering 5.1%.
Well, that's
fixed.
That's very, very good rate. I went to the same bank actually a couple of days ago, to be honest with you, because they screwed up. That's another story, but we'll leave it for another time. I asked them. I said, "What's the interest rates, by the way, right now?" You know what it was? It was 5.75%.
Wow.
I mean,
1.2%.
I mean, it is still high, but 1.2%. And all I did was, by the way, I said, you know what? Don't renew my mortgage. Convert all of my mortgage to my line of credit. So I am paying a little bit higher interest rates right now, but I was just waiting for the market to come down, the interest rates. I'm just going to be renewing my mortgage very soon.
Right. You got to watch out, man. There's so much bad advice from like people taking their clients to bid on 85 properties. What a waste of time. Like someone had to sit in that line for 45 minutes and sell them troops and sell them hopes, and they put an offer for like 760.
Yeah.
Right? Just waste everyone's time. There's so much bad advice. In terms of good advice, you should definitely continue listening to this podcast. Hopefully, by the next time we do it, we have a name. We have a name for it. We are talking industrial real estate next
That's
week,
correct.
or the next episode. For the next episodes, we're going to start having some guests. Hopefully, some actual developers are coming
Yep.
in. I know a few of them who are actually coming in, and I'm really excited to hear what they think, what they've been thinking about the market in industrial real estate, which still remains to be a good investment opportunity if you have the right property. Right, and we have some top realtors coming into the market.
That's correct.
Into the market, into the podcast. And hopefully we're going to have a name for this podcast again to present to them.
Yeah, so we're gonna get an industrial developer come in next week, and we're gonna talk about what a market industrial is in terms of the commercial realm. We're gonna be having a mortgage broker come in very soon to answer all of these questions that we've had, and we're gonna grill him down and see what good advice we can get from him. And then we're also gonna get pre-construction experts. Within the field, who has been in the field for like 20 years now. So I'm very excited for that session as well. And I think we're going to learn quite a lot of valuable advice and sort of market know-hows. So really excited, really looking forward to the next few weeks.
All right. Thank you very much. Thank you, Mahmoud, for your time. Thank you, everyone, for listening.
Thank you, sir.
And see you soon.
Yeah, we'll see you next week. Take care. Bye-bye.